Hello, everyone. My name is Jonathan Blaine. I'm going to be your moderator for today. I want to welcome you to this session. This is the second session in a series of three regarding resilience during COVID-19 and responding to certain uncertainties that we have here in Thailand. As everybody is well aware, we've been into this for about a year and a half now, and the economic impact has been sort of all over the place. We have three sessions planned for this series. The first one we already had, which was a workforce restructuring. This particular session will focus on debt restructuring or debt workout and other types of debt, restructuring for accommodating debt issues, etc. What I want to do first is take us through just a little brief introduction of the firm, and then we will introduce our guest speaker today, partner in our Bangkok office, Vinay, and then we will go through the material, and after that we will have some time for Q&A. So if you want to submit questions for Q&A, make sure that you take advantage of the ability to do so through the Q&A section that you can click on and submit questions through that. So just by way of background, and for those of you who don't happen to know us, I hope a lot of you do, but for those of you who don't, DFDL is ASEAN. We have been here for 25 years. We were originally founded in the Vientiane office, but we have grown to work in all the ASEAN jurisdictions, plus one. Actually, we now have Bangladesh, or we've had a Bangladesh practice for a while, so we work throughout the region. On the next slide, if we could go forward to the next slide, it will just give you a glimpse of not just the jurisdictions where we work, but all of the practice areas we have, and also the additional desks that we have. So we have China, India, French, Japan, and Korea. So we have people in our firm scattered throughout the firm who speak all these languages and head up practices for those particular desks. We are a full service firm, so again, we provide all the services that a company or client might need, but again, our sessions are going to focus mainly on workforce, debt, and real estate. So with that in mind, I want to introduce our speaker today. So Vinay Ahuja works out of the Bangkok office, although he, like many people in the firm, wears several different hats. So he is the partner and head of the banking and finance practice for the whole region. He's also the head of the technology practice for the entire region and leads our Indonesian practice office out of Jakarta. So without further ado, I think actually, Vinay, you've been with the firm a very long time, right? I will ask you real quick.
Thank you, John. Yes, now almost 11 years now with the firm. So shuttled between Vientiane, a little bit of Cambodia, Myanmar, and last 6 years in Bangkok, plus shuttling with Jakarta.
Yeah. So you can tell we have even though all of us tend to have a little bit of a niche somewhere, we tend to be cross industries and expertise, but also pan-regional. So a lot of us have regional expertise, et cetera, and that's quite typical of the professionals in our firm. So again, to start us off with the conversation, today's conversation is going to focus mainly on debt restructuring for companies that are having debt issues or debt servicing issues. Obviously, during the downturn in the economy because of the pandemic, lots of companies have sort of run into cash flow issues, especially those companies or businesses or industries where there have been mandatory shutdowns and the like. So lots of companies are looking to find ways to accommodate or restructure their debt. So Vinay, if you could maybe give us a little bit of information on what options might be available to organizations desiring to restructure debt during this period.
First of all, debt structuring has been, I believe, the talk of town, I would say, in the COVID era. Previously, it was more about the companies which were really struggling due to some issues to their finances were more looking at restructuring options. But because of COVID, we have seen majority of businesses looking at options to restructure their debt. Now, Thailand, again, there is no one size fit all kind of a concept. It depends on what is your debt. Do you hold any assets? What form of assets you have? How strong those assets are? How were you performing back in 2019? How bad was 2020 and how worst is 2021? How much leveraged you are at the moment? So depending on all these factors, there are some options available under Thailand, and the Thai government is, I would say, generously working in coming out with solutions, starting from the large companies which are doing business and even to the SMEs. So before any structuring options can be evaluated, one of the foremost thing to be considered by the company itself is what is the status of debt and what is the status of the asset. Now, I generally divide these options into 5 categories. First is obviously if you have a debt running and you believe it's on a high interest rate, then the first option would be to approach the current financial institutions under the regime of Bank of Thailand of soft loans. Bank of Thailand has been granting incentives of soft loans to the financial institutions, wherein financial institutions can grant you loans on a lower interest rate. So if you believe that your current lending, either from an existing financial institution or from a third party borrower or from any other lendings is high, then you should kind of approach the financial institution in restructuring your debt to a soft loan provision, wherein maybe for the initial 2 years your interest rate will be 2%, and for the remaining term it can be maximum of 5%. Again, this is again to the discretion of the financial institution, and going back to how good your assets are and how good your 2019 was and how you're performing in 2020. The second I would say is if you have been somehow managing your debt well, but you are having your cash flow issues. Let's say you feel that yes, my business is coming back, but the invoices which I'm raising on the business may give me money back only after 90 days or after 6 months when my vendor decide to pay me. Then you may try approaching the third party lenders per se for maybe a crowdfunding, an invoice financing, or possibly a balance sheet financing. You have some new players, P2P players like funding societies, Siam Validus, Peer Power, who are ready to offer you invoice financing on a monthly or a quarterly or a 6-monthly basis. Now, you have to understand in this aspect is you are sure that yes, your invoice will get paid. It's about the time when it will be paid and you need the money now. So I believe this is the second kind of option what you can consider. Third would be, are you asset rich and poor cash? So if you are a asset rich person, then obviously there is a new scheme launched by the government of Thailand or the Bank of Thailand, which is known as the asset warehousing scheme, where you can transfer your transfer your assets which were previously collateralized to the financial institution, and kind of either with an option of buyback after 5 years, within 5 years, and to rent back and lease those assets back with a pre-agreed price. So technically, you can put a price on your assets, give it to the financial institution, lease it back to run your business, and then have the option to buy them back within a period of 5 years. Again, it all depends again to the discretion of the financial institution. One key ingredient to this option would be that you were an existing borrower to the bank and the assets which are to be transferred were already collateralized with the bank under that debt. So this may not fit well for the new borrowers or the borrowers of other financial institutions. So this is one place where a lot of large asset-based companies can consider. And to my understanding, again, hospitality, or what I call the hotel industry, real estate industry, or maybe the airline industry can take advantage of this option. Like what even offshore, if you look at Singapore Airlines, they kind of sold all their aircrafts and then leased it back. So it's kind of that similar concept. The fourth option would be about the debt equity conversion. Now, as some of you may know, debt equity conversion is not the best option, given there are a lot of restrictions on debt equity conversion. So this has to be carefully structured with the financial institution and work better with a public company. The last option would be, again, as everyone in the news would have read about, Thai Airways going to the court about the court-monitored restructuring. So yeah, that is one way where you feel that no options are left, and you think the creditors are knocking on your door. You run the risk of them enforcing on the securities. So it's one way to approach the court with an application to consider rehabilitation or a court-monitored rehabilitation. And I believe that should be the last option, because you run the risk of bankruptcy there. So these are 5 broad options what one could consider on restructuring debt in Thailand.
Great. So with those sort of 5 options sort of detailed out quite well, I'm wondering if you can just give us a little flavor on the legal and regulatory compliance that might be required for a debt restructuring.
Okay. The first 2 options when I talked about that was the soft wool loan or the peer-to-peer funding or the crowdfunding. I believe there isn't much of regulatory scope there. It's again to the discussion with the bank when you're talking about the soft loan, or with the crowdfunding issuer or the invoice financing. Again, you have to enter into agreements with these parties and they will handle it. The regulatory part comes in when either you were doing an asset restructure, asset warehousing scheme. So as I previously mentioned, one of the key ingredient in this would be, one, you need to be an existing borrower, and your existing assets should be already collateralized with the bank. On the regulatory side, one, you agree on the transfer price initially. There are 2 options. Either the bank can run the asset by themselves, or you can lease back or rent back those assets. Now, practically looking at it, bank will not take your hotel to run by themselves. Again, a lucrative option would be that you tell them that yes, you will lease back or take it on rent. So the rent paid to the financial institution can be considered towards the transfer price, what has been previously agreed. So obviously, whatever rent you are paying to the bank can be deducted from the total transfer price which has been agreed. There is a 1% carrying cost which the bank may apply. And lastly, there can also be a custody expenses which the bank may like to apply depending on what kind of assets are in custody and how much expenses are involved there. Lastly, when we talk about reorganization by court, now this is a more tricky part. Again, you have to have your what I call creditors on board. You can approach the court. The court will, in the first application, decide that whether your debt is more than 10 million. It's definite. Number 2, you are putting in your request in good faith. It's not a fraudulent manner. Number 3, there is a likelihood of a rehabilitation. If the court feels that there is no likelihood of rehabilitation, then they may put you as well into the bankruptcy side. So if there, with these 3 or 4 factors, if the court accepts your application, then the entire cycle of rehabilitation or debt restructuring starts, wherein the court will appoint a plan preparer and a rehabilitation plan will be prepared, discussed with the creditors, and once the court accepts your application, a kind of a stay is granted, wherein you as a borrower are not allowed to sell your assets or do anything with those assets. Similarly, if you are a creditor, you cannot enforce your rights vis-a-vis the borrower. You cannot file a civil claim or a bankruptcy claim against the borrower. Similarly, the authorities which were providing you public utility services, electricity, water, XYZ, cannot suspend those utility services. So yeah, you kind of get a stay there, wherein you have to work on a plan with the creditor. Now, you just can't take things for granted, because you have to make sure that a plan works, and you are able to have a kind of a settlement with the creditor, wherein creditor is also in a win-win situation, because no bank wants to kind of leave everything outside. So yeah, there when court comes in, and there are a lot of other things which come into the picture.
Yeah.
But having said all this, approaching the creditor on first place, looking for a solution, I believe is the best way forward, rather than getting into all this regulatory scope.
Okay, that's very detailed and very good. Being cognizant of the time a little bit, I'm wondering if you can give us just a little bit of flavor as far as opportunities for foreign investors. Obviously, there's a lot of PE and everything who've got some powder dry that they want to try to invest or pick up assets at cheap rates, or do some lending or some debt investment. So I'm just wondering if you're seeing anything in that space, or if you're seeing any opportunities for foreign investors to come in and help with that process.
Yeah, so there are two forms of foreign investor, what I could feel. One are the general investors. If they're looking for a good valuation, I believe now is the time. We have seen an era of 2019 or maybe start of 2020 where we saw weird valuations. Even nobody could make sense of those valuations. But suddenly, if one would look at few companies, we are looking at least 70% discount of those valuations. So if your portfolio was to invest in certain form of companies, then I believe right now it's a good option. For example, currently 47% of NPL of Thailand is wholesale and retail trade. 19% is into manufacturing. 11% is into services. So if somebody is looking on a investment side into these sectors, then it's a fantastic place for getting a good valuation and get those, you can say, good companies at a cheap price. Now, this I'm talking more from investor's perspective, where you're not looking for a kind of a takeover or a majority stake and things like these. Now, there are other kind of foreign investors as well who are more focused on distressed funds or a takeover of distressed assets and sale of NPLs. So I believe this is again a great time for these kind of investors as well. There are a lot of at least distressed asset on the market for real estate and the hospitality side. Aviation, we are seeing a lot of, again, distressed assets. So, and though the Bank of Thailand has relaxed the criteria for NPLs in Thailand, but I still believe in some time we will have a larger portfolio of NPLs will be out for sale. And the investors which are looking for those kind of opportunities in the market, then it's a good time to talk to financial institutions for possibly a deal on the sale of NPLs. And if you need any assistance, then definitely we can also help you out in reaching out to the institutions and packaging those NPL transactions.
And just for the last question, if we can just, you mentioned the sectors or different sectors a moment ago. So if we could just maybe recap, what are the sort of the sectors that are most prone to large-scale consolidation or debt restructuring at the moment?
Oh yeah, for Thailand again, it's a one could say a multiplier effect. And there's a theory in the market that every $100 brought by a tourist, you generate $1,000 of business. So with 14% of GDP based on tourism, there are a lot of companies which we see have been affected with the COVID. So obviously, first being the one would say the hospitality industry. Second being again the food and beverage industry, with the restaurants opening, closing, bars coming down. So yes, that is one way. Aviation industry. We are all seeing how the restructurings have been filed. To a certain extent, all the service sector linked to these industries, aviation, real estate, hospitality. Then there are businesses which are also linked to these industries. To give you an example, advertisements. Now, if any of the attendees driving to the airport in recent times can see all the billboards empty, nobody is putting those advertisements up. Then to give architecture and design. Suddenly, architecture and design used to be a lucrative business because of large-scale hotels and real estate development in Thailand. It's kind of out of business at the moment. So there are a lot of these related businesses. And sometimes I give an example. Everyone would have seen a golf cart in a lot of these hotels. Now all these hotels shut. Even that kind of manufacturing business, which are manufacturing golf carts, is kind of out of business or struggling. So every business which was kind of related to tourism, we will see possible consolidation, or we are already seeing possible consolidation. And lastly, like money exchange businesses, we could see a lot of these small mom and pop shops everywhere in Bangkok, at least, offering foreign exchanges. We don't see them more. So yes, we expect some consolidation in that area as well. But yeah, I believe the entire scope or the business sector has been affected, and I would say it will take some more time before we see the recovery to the 2019 levels.
Fantastic. So I think given that sort of roundabout in sort of debt restructuring issues and sectors and options, etc., I think we have a few moments for Q&A. So I'm wondering if anybody would like to submit a question from the floor, or for what that floor is. Or you can do so by making sure that you go to the live event Q&A and submit your question. Noting that currently we don't see any question in the box, what I wanted to do is maybe take a moment and circle back to Vinay and ask him about foreign ownership restrictions. Obviously in Thailand, we're quite used to foreign ownership having an impact on asset ownership, etc. So I'm wondering if this has any impact or plays into sort of debt restructuring options, or restricts certain availability of certain people who might want to finance that, or what have you. So I'm wondering your thoughts on that.
Yeah, so kind of it limits your debt restructuring when dealing with third-party lenders or offshore lenders. So if it's if your asset was a real estate, or you are operating in a sector which is not 100% open for foreign investment, then creating security of your assets in favor of foreign lenders or offshore lenders becomes tricky. And hence, your marketability of your assets is little limited, and hence even the offshore lender has to take on board with a local lender. And so it becomes a little complicated on that front. Yeah, so I believe this is one place where we may see some restrictions if you are holding some real estate assets or real properties generally as your assets. And that's very common with the current scope of things, where hospitality and real estate is one sector where a lot of debt structuring is required.
Okay. Fantastic. With no other questions from the floor, I think we'll probably wrap things up and end it here. Of course, we want to first thank Vinay for taking time out today to enlighten us as to what the options are and sort of point out, give us some sort of on the ground intel as to what he's seeing in the market and what we're seeing across the region, and especially in Thailand, specifically what government incentives there are, what other programs there are, etc. So it's actually quite helpful and really informative. So thank you, Vinay, for that. If you could, before you leave, if everybody in the session would take just a moment, scan our QR code and give us feedback through our feedback survey. Of course, we want to try to bring interesting speakers, best speakers and topics and things that get people a little bit excited and provide information that's useful and helpful for everyone in the industry. So if you could take a moment, click on that and fill out the survey, we would be most indebted to you for that. In addition, on our website and through the link I think that was shared through the Q&A, we have prepared a government initiatives and support document. It's a sort of a presentation that where we've collected all sorts of information about ongoing programs and initiatives that the government has put in place over the entire period of COVID. We update that pretty regularly. We don't update it every single time there's a change, but obviously the changes tend to come in big chunks here. So when the big chunks come, we try to update everything so that people are really current and able to sort of use this resource to understand all the potential opportunities and the support that's available that's being put out by the government to support industry and companies specifically in investment through this really challenging and difficult financial and economic time. With that, I think that we will complete today's session. I want to thank all of the people who took the time to attend. I hope you found the information informative. I hope you found some of it useful. If we can help you with anything, or if you have any questions, obviously you can contact Vinay or any one of the members of our firm. We'll be happy to either answer your questions directly or steer you in the right direction. And I think if those of you who can stay around for the next session, please do. I think that will follow on real estate restructuring and potentially insolvency or restructuring issues involving specifically real estate. So if anybody's able to stick around for that next session, it would be greatly appreciated as well. Okay.
Thank you, Jonathan.
Yeah, thank you. Thank you, everyone.
Thank you all for attending. Yeah.
Thank you, everyone, for attending. Thanks.